So my name is Thomas Horton. I'm the head of corporate development and investor relations at Adriatic Metals. We are developing a base and precious metals company with assets currently focused in the Balkan region. Notice this disclaimer I'm taking as read. So, as I mentioned, we're focused in the Balkan region. Throughout Eastern Europe and the Balkan region, there is what's called the Tethyan belt, which is a very rich polymetallic mineral belt which runs sort of from southeast northwest through the region, through Serbia and Bosnia. Our flagship project is the Vares project, which is here on the edge of the Tethyan belt, which is a very rich high-grade deposit. And then the Raska project is over the border in Serbia, and that is a lead, zinc, silver deposit. The Vares project has lead, zinc, silver, but it also has copper and gold. So the Vares project first came about in 2016. The company was founded by three individuals. One of them is the current MD and CEO, Paul Cronin, and there is a huge amount of investment that they put in the business and maintain a significant shareholding going forward. 2021 is a very exciting year for the company. We are currently going through the definitive feasibility study for the Vares project. We released a PFS, a preliminary feasibility study, in October of last year. I've got some data on that later in the presentation, which I'll show you. And we have ongoing exploration there as well to build out the current mine plan. And also Raska in Serbia, we are also investing a lot in the drill bit. We recently, yesterday, completed the acquisition of Adriatic Metals, which is a license area we had an option on, which is highly prospective, and I'll talk more about that later on. But onto the share price. So we are both ASX listed and LSE listed. We're standard list here in London. The share price here is actually in Australian dollars, as the company originally IPO'd in 2018 at 22 cents, and I think it closed last night around $2.20. In English money, that's 130 pence or £1.30. The shareholder base is very tightly held. Our largest shareholder is an Australian copper mid-tier called Sandfire Resources. They have projects in Australia and in Botswana. They have been on the register for some time and maintained their 16 or so odd percentage. Paul Cronin, Milos and Eric are the founders of the business. They maintain significant shareholding, and then also management and directors. So you've got quite a sort of solid, sticky money there from early investors, and then more recently, Sprott, DAT, EBRD, and various institutional investors have come on board. One thing really worth mentioning is that it's very rarely that you find EBRD, who are the European Bank of Reconstruction and Development. Very rarely do you see them on a shareholder register for a mining company. They have very strict ESG protocols that you have to follow. I can talk a little bit more about that later on, but they came on as a shareholder in November of last year, investing £7.5 million. So yeah, our market cap is about £250 million, and we've got 30 million in cash. We do have a convertible loan that was provided last year by a company called Queens Road Capital. That was in US dollars about 20 million. Queen's Road is a bunch of high net worth mining investors that have set up a tier 6 listed fund, and with that has come some great institutional launch. ESG, obviously, it's very important with every business. It's incredibly important in the mining business, because we are moving ground and we are affecting communities. The site of Vares, where I'm currently sitting at the moment, is a brownfield site. The old mill site and office buildings are in the process of being redeveloped. The office building, which was originally built here in the 1980s, we have repurposed for our office, and the plant site will be remediated to build the processing plant for the Vares project. Tailings is always an interesting topic with mining companies. We are very lucky in that the project here is very high grade, and as a result, we can build a profitable operation which involves putting the tailings back underground when we finish mining, which is a process called backfill. For the just over 1 million tons that we will not be returning to the underground, will be in a dry stack tailing near the plant site here in Vares. In terms of repurposing villages and towns, we don't have to do that. This is a town. We're near the town of Vares, which is at the bottom of the hill. That is a town that has a steep history in mining. I think the first iron ore mine and foundry that was built here was in the 1890s, and it has been, that industry has flourished up until the Bosnian War. The Bosnian War finished in December 1995 following the Dayton Accord, and since then there has not been any return of mining to the area. So there is very much a strong community, a strong community feel for Adriatic being here. And it's important that we nurture the community here. As part of our hiring policy, we ensure that we hire locally from our suppliers. If they are not local, then they set up locally. It's very important that what we do is we provide back to this community. We've also recently just set up the Adriatic Foundation. The foundation is seed funded by the founders of Adriatic, and they will be focusing on investing in projects within the local community that improve education and environment and healthcare. And from a governance perspective, we are guided by the BRD frameworks, and those are world leading. And for a country like Bosnia, whose mining industry is still rising up the curve in terms of Western standards for operating, is really setting a high benchmark for this country. Yeah, we hope to make an incredibly positive impact. So onto the Vares project. As I mentioned, we've done a pre-feasibility study on the project that was done in October of last year. I mean, you just don't see numbers like this for mining projects. It's $1 billion NPV at 8%, over 100% IRR, and a capex that is very manageable. We will raise 65% of that capex from debt, and we have been speaking to a number of financial institutions already that have shown interest in providing that debt. And you know, we already have a very high market cap in comparison to that capex. So raising the funds for the project finance, we don't see an issue at all. We have a very supportive shareholder base, that will be with us every step of the way. We are fully financed through to completion of the ESI and feasibility study, which we expect to be completed in Q3 of this year. That is from the funding from EBRD, £7.5 million, and the $20 million of convertible loan note that was provided by Queen's Road Capital at the end of last year. So this graph at the top is a cash flow profile of the Vares project. So over the first 5 years, the project will be producing over $200 million of free cash flow. And that is why it has such a high IRR and NPV. Now, there is exploration upside here, which I'll talk about, where we plan on smoothing out that cash flow profile beyond 2027 so that we can maintain that 200 million free cash flow. That may involve also bringing online the Serbian assets that we have, the Raska project. We are doing exploration and a study on that later this year, which I'll talk about a little bit later on. But essentially, yes, this is a very high margin operation with a very low cash cost. So just a few metrics on the PFS. As I mentioned, it is polymetallic. So we have precious metals and base metals. So 45% of the precious is precious metals revenue. The rest is from base metals. There is a small component of a product called barite. This is the BA here in the sort of white in the middle. The barite is a clay that's used in oil and gas drilling. Traditionally, as I mentioned, this is a brownfield project here. They were mining for barite in the 80s, and they did not assay for gold and silver. They knew there was lead zinc. There's plenty of lead zinc old workings here that go back hundreds of years. So it was by doing the assaying for the gold and the silver, it really sort of changed the economics of the project. In terms of production, yeah, over sort of the first 7 years, it'll be between 10 to 15 million ounces of silver. That's this graph in the top right-hand corner. Yeah, at a very competitive all-in sustaining cash cost. Actually, one thing I should mention is that this is both an underground and open pit operation. We start with the underground operation, and in the latter years goes through to open pit. These are two deposits that are about 10 kilometers away as a crow flies, and yeah, we'll be mining the underground. We were recently awarded a large concession area at the Vares project, which is marked here in blue. This got the geologists incredibly excited. We've got a large geological team here, and following the acquisition of Tethyan Resources, which is how we came about the Serbian assets, we've also inherited their geological expertise as well. So sharing their experience of the Tethyan belt and the geology that they see in Serbia compared to Bosnia, they put their heads together and found a number of drill-ready targets that we will be drilling in short order. Actually, there was some snow on the ground here, but that is now mostly melted. So that means the drills can start turning again. But yeah, there is lots of historical workings around this area, and the Tethyan belt has a history of thousands of years mining in this area. So where you find a new deposit is typically where there was an old mine that sort of scratched the surface. So applying modern exploration techniques and modern mining methods, we believe that these high-grade structures repeat across the licensed area, and so that's what we'll be looking for. Actually, one last thing: the exploration budget for this year in Bosnia is £6.9 million. So there is a lot of drilling and geophysical surveys that we'll be doing over the course of this year. So that should keep lots of news flow dripping into the market. On to Serbia. As I mentioned, typically where we find resources is where there's been old mine workings. Well, Kizovac, which is within the Raska project area, is one of those areas. And so we acquired the Raska project from a company called Tethin Resources. It completed in October of last year. Tethin was a TSX listed company. It was quite advantageous at the time. We did it's a fully scrip deal, and it cost $13.8 million. So with that came a huge amount of data and, as I mentioned, a geological team that are working now very closely with the guys here in Vares. There's some historical drilling that has been done there. We're following that up. There's some really exciting high-grade intercept. This will be an open pit mining operation. It won't be an underground one. So the grades you'll see here are a little bit lower than that at Vares. But still, we've been drilling pretty hard over the winter when it's been warm enough, and it's warmed up again now. So it'll be we'll continue the drilling, and results will be coming out in the market. This is our project number 2. Unless we find another big Ripitsa, which is the name of what we call the high-grade deposit here in Vares. The plan is to once we've completed the study and engineering work and delineated a large enough resources, that will bring Serbia as the sort of next cab off the rank in terms of our project. The exploration budget here is actually larger than that of Vares. It is about £8.9 million. And so yeah, this is predominantly silver zinc lead. There are odd bits of other metals, but that is the predominant metal focus here. In terms of timeline, we have recently received the exploitation license and environmental permit for the 2 deposits here in the Vares project, which are called Ripitsa and Verevaca. Think of that as just the Vares project. And we have the ESIA and feasibility study, which will come out over the coming quarters. And then there's a couple of operational permits that fall out of those projects. But yeah, we are planning on starting construction later this year. The build period is about 14 months. The size of the processing plant is quite small. It's a 800,000 tonne per annum plant. So yeah, that's why the build period is 14 months. And also it's because we have fantastic infrastructure here. We have a railhead which comes from Sarajevo, or goes from here through Sarajevo down to the port of Ploče in Croatia. So the big equipment will be coming in and out on the rail. Also, we've got road here. The Tethin work program is the company that we acquired, Tethin, that is the Serbian asset. So that's slightly earlier stage than the Vares project. So we still have more drilling to do on that, which, as I mentioned, we have an 8.9 million budget for. And then we'll be starting a scoping study on that later this year to determine the economics of it. But from what we're seeing, we're pretty excited from the drill results that have been coming out. Just a sort of last thing on the community, during the build phase of the Vares project, Adriatic will be 17% of the foreign direct investment going into Bosnia, which is quite incredible. And during full production, we will be 1% of GDP. So as I mentioned, we've set up the Adriatic Foundation that will be providing back into the community, investing alongside the municipality here. But there are other things that we are doing within the community as well in order to support it. lastly, on board and management, Paul is the founder, as I mentioned, managing director and CEO. Our non-exec chairman is Michael Rawlinson, who's from a sort of banking corporate development background. Snogla Karic is based here in Bosnia, and Sandra Bates, both of them manage the Corporate Social Responsibility Committee, and they both have a legal background. And Julian and Peter Bilby are real well-renowned industry leaders within the mining space. Just this one last slide, actually. So when we released the PFS, it was about $1 billion of NPV. Commodity prices, if you do that at current spot commodity prices, essentially you've got a $1.2 billion NPV, which puts us trading at a 0.3-ish price to NAV, and that's ignoring the Serbian assets. If we get a little rally in the silver price, then you're looking at 1.4 billion. I mean, I think given the work that we've been doing so far on the definitive feasibility study, we're expecting to improve on that NPV figure. And so from a price to NAV perspective, we are trading at a bit of a discount to that of our peers. You would expect a mining company approaching DFS that you would trade at a 0.5-ish NAV. So from a £1.30 share price where we're at the moment, you could expect over two and a half quite easily, especially if we get the wins that we're expecting on the definitive feasibility study. In terms of target prices, we've got these brokers here in the bottom left-hand corner that are supporting the company and believe in it. And if you're interested in their research, either contact them directly or you'll feel free to contact myself. Right, I've been going for a little bit over 20 minutes, so let's turn it over to questions.
Question here about the funding for development. I think you said 65% capex from debt. Where's the other 35% coming from?
So, I mean, at the current share price, we are unlikely to raise equity. There is other structures that we have been looking at. There is potentially a prepay because our concentrate is heavily sought after. There is royalties and streaming because we have quite a lot of precious metals within our revenue makeup. There are streams. There are considerations that we've had on that, but we feel that the share price is very much undervalued, and we do not want to be diluting shareholders at this price range. But yeah, we've got plenty of options. When you've got an IRR of 113%, you've got a lot of options in terms of how you fund your project finance. And we are looking under every stone, so to speak.
And talking about kind of, I guess, like offtake partners or clients or customers, you said paying up front. Have you started having those conversations? Is that something that would be appropriate for you to be doing already?
Yeah, absolutely. I mean, we can't have project finance without offtakes in place. So there are 4 different concentrates that we'll be producing, and we've been speaking with a number of smelters worldwide, from Europe to China, on who can provide us with the best terms, not only from a sort of payabilities and TCRCs point of view, but also whether there's any sort of funding that they would be prepared to provide us, i.e. in the way of a prepay.
And a question here about the mine development, and you explained you're going to go underground first and then open pit later. And why not the other way around? Would it not be cheaper to do open pit first? Yeah,
that's a good question. So it's actually because there's 2 deposits. So the open pit is actually a formerly producing mine. So it is a stone's throw from where I'm sitting right now. It's what was called the old Vares lead zinc mine. And essentially the old open pit walls will just be extending through those walls. The Rapitsa mine is a greenfield deposit, and as I said, it's about a 10 kilometer, it's 10 kilometers away as the crow flies. And there are other sort of small underground adits from the Austro-Hungarian era, but essentially it is a greenfield operation.
And so then actually, are there greater costs or greater barriers for doing the greenfield then, for doing the open pits? It's quicker and easier to go underground?
The grade of the underground of the Rapitsa deposit is so high that you want to bring that cash flow forward as much as possible. So that's why we're doing it first. We only have I think it's between 100 and 200 meters of development before we then hit ore. So I think it's actually, yeah, it's somewhere between 100 to 200 meters. So from a development standpoint, you're not going very far at all. So that the capital cost of doing that development is pretty small. So we've run the numbers, and 100% it makes sense to do the underground mining first.
Lovely, thank you. And a final one for me then. Could you just re-highlight the expected news flow for the rest of this year, and then part two of the question was when you expect to break ground, when you get to kind of get that first pound invested into actual mine development?
Yeah, sure. So let me just go up a few slides. So as I mentioned, we've got £6.3 million of exploration spend in Vares, which is Bosnia, and 8.9 in Serbia, the Raska project. That's a lot of money for exploration. So there will be a lot of news flow coming out over the course of this year on the exploration work. Both have really exciting targets, which we're looking forward to drilling, and hopefully will return what we're expecting. Concurrent to that, at Vares, we have the engineering studies, the feasibility study, and the sort of various news flow parts to that, which will be coming out over the sort of coming quarter. ESIA, so the environmental side of things, we're feeling very confident that will come out and deliver they'll then fall into the permit process shortly thereafter. And then there is study work that we'll be doing in Serbia as well, basically putting some numbers around the deposit so that we can generate an NPV and IRR and work out the economic potential of that project. So 2021, there's lots of news flow. We're very excited by what we've seen here, and hopefully the drill returns what we're expecting, and the engineers deliver us deliver us some good study results.
Lovely.
Following that work.